again, Fausto. Welcome, everybody. I'm happy to be here with you. I'm Vince Vora. I'm the head trader here at Trading Wins. And today I'd like to share with you a system I've been trading with since 2019 now, which is our Victory system. Earlier in 2024, we came out with a second version. So Victory 2.0 is the latest version. And that's what I'd like to share with you today. That's me here, Vince Vora. I've been trading in this business. Yeah, Fausto said over 30 years. It's been well over 30 years. It's been quite a journey, but so much fun. I have a passion for the markets, glued to charts day after day. And, when you stare at charts for that long, you pick up on a few things. And so along the way, not only do I want to share with you our victory system, but a lot of little technical analysis tidbits that have served me well over the years. Um, Before we get started, I do want to say that trading can be risky. So please don't go out and trade with real money until you're completely comfortable with the system that you're using. All right, that's it for the slides for me. I'm going to get right into the charts. I want to first start off by explaining what Victory 2.0 is and how it came about. And then I'm going to show you my approach. I take sort of a top-down approach. I start on the monthly time frame for my analysis and move it down. These days, I trade mostly on the daily time frame, but as Fausto said, this system can be used on any time frame, whether you're trading on a 1 minute, 3 minute chart, swing trading on a daily, or investing with a weekly and a monthly chart. It works on any market. So even crypto, it's just based strictly on technical analysis. I'm going to be showing you individual stocks, ETFs, indices, Forex, futures, whatever you like to trade. And before we release this, we did test this on markets, different markets around the world, the Nifty in India, Australia, UK, Canada, US, etc. Again, it's based strictly on technical analysis. And the main benefit behind the Victory system is that it was designed to identify a strong trend with strong momentum behind it. When you're trading with trend and momentum on your side, more than half the battle's won right off the start. So let me start by explaining what you're seeing here on the chart. This is a monthly chart of the SPY, the S&P 500 ETF. We will change time frames. We will change symbols. Please, as we go through this, type in whatever symbol you want to see in the chat. Ask me any question. As Fausto said, be selfish about this. You're here to learn. Ask us whatever questions that you want to know about trading, about the system, and type in whatever symbol you want to see, and I'll bring that up. So here's our victory system. Now, there are buy signals, there are sell signals, exits, these little TPs and little dots here, the ribbons down below. Let me explain everything here. Obviously, when the algorithm comes together, that it identifies a buying opportunity, it's going to pop up a little buy signal here. Once the trade triggers, every candle after that will be colored green as long as we're in a long trade. That is done intentionally. Reason being, we try to keep you disciplined and help you remain in a trade. A lot of times when you get into a trade, it starts going your way, you're feeling good, comfortable, and then you get a couple of red bars against you. You start doubting yourself. You start to wonder if you're going to give back your profits. And a lot of people end up getting out of the trade early, only to watch this thing continue going higher. And, and that messes with your mental state, right? Your psychology. So we thought if we colored everything green when we're in long trades, everything red when we're in short trades, that would just help you along the way. Now, the intention here is not to take every single symbol. Okay, so for example, these sell signals here, we would not be shorting here. Reason being, We're not in a downtrend. We don't have downward momentum. So we ignore these signals. One of the things that the victory system is very good at is helping you avoid those sideways markets, the consolidation periods, the chop. That's where most traders lose money. You know, in something like this, where we have a bit of a consolidation, right? Have a look at the price bars here. We're just kind of going sideways through a couple week period here. That's where, you know, you get in, you get stopped out. You go long, you get stopped out. You go short, you get stopped out. And traders just get chopped up and give back all the profits that they made on a nice trade. So I'm going to give you the exact 8 checkpoint list that I use to qualify a signal. Okay, we'll do that in a second. But obviously, buys point to long trades, sells point to shorts. Now, sometimes you'll see the system go directly from a buy to a sell. So, what I want you to remember is that any change in color means you exit the trade fully. Okay, so for example, if we were to go long here, you might also see a dot, a green dot. That means the same criteria that came together here for the buy has come together again. The only reason we don't list it as a buy is because we're already in a trade. So we're showing you another good entry point here to give you the opportunity to get in on a trade if you didn't get in on the first one, or if you're a little more aggressive, to add to your position if you see that. And during a consistent trend, sometimes you will see several dots appear. So you can add to that. And then if you see a TP, which stands for take profit, that's just a suggestion of where you might want to take some off the table, not close the trade, but take some profits off the table. If you ever see a change in color or see an exit flag, then you need to close that trade completely. That is the way I trade it. If you see a yellow bar, that means you should not be long, you should not be short. You should be waiting for the next proper signal. Okay? Now, um, down here below, we have ribbons, 2 of them. I'm going to switch to a daily time frame and show you that the ribbons that appear below here are for 2 higher time frames. So if I'm on the daily, it'll automatically populate weekly and monthly. What this is showing you is the color of the victory algorithm on those time frames. So without me switching to a weekly or a monthly chart, right? You can see here that on the daily time frame, we're in sell mode, we're in red. Weekly is also red, but monthly is still in green. Okay? So what we want when we're looking for a trade is to have everything aligned, all 3 time frames aligned. So if I was looking at taking this buy signal and the weekly and the monthly are both green, then I know I have a green light to go ahead with that, as long as it meets the other criteria that I will explain in a minute. All right. If I were to switch to a 5-minute time frame, what you're going to see here are the 2 higher time frames from there, a 15-minute and a 30-minute. Okay. So then if I was going to go short here, for example, I'd want to make sure that the 15-minute and the 30-minute were also trending lower. Okay. Very, very helpful. So at a quick glance, we see what the 2 higher time frames are doing, and we can make sure we're trading with the same trend on the medium, the short term, the medium, and the long term trend all together. That's what we want. One last feature is this table on the side. Now, this table, right now I have 10 rows. You can do any number you can choose by going into the settings. Here, let me show you the settings. This indicator is fully customizable. You will be able to turn on and off whatever signals you want, customize the table, etc. So you have up to 20 different rows that you can add to this, and you dictate that by here. So I can have 10, I can change that to 5, and this will, you'll see this table shrink down to 5, etc. So you can type in the symbols, and this will alert you on the right side here. It will alert you if there's a buy, a sell, an exit, whatever there is a symbol on that particular market. Okay. So I like to use this for open positions. For example, if I have an open position on Meta, I put that in here, and that way I will be alerted to a sell or an exit immediately when that happens without me having to pull up a chart of Meta and having to look at that. But for this presentation, I'm going to remove this table, and I'm going to remove the take profits just to clean it up a little. I like to keep my charts as clean and simple as possible. It's easier to read, it's easier to spot setups, etc. Okay. All right. So let me go through the trade criteria that I look at, and then I'll start going through some of the symbols that some of you have put in there. So again, what I like to do with this is take a top-down approach. So I start with the monthly chart, and I will go through the Dow Jones here, and you'll see currently, we're in along on the monthly, the S&P, the Nasdaq, and the Russell. Now the Russell has gone red. The other three are still green on the monthly time frame. So from there, I will work my way backwards, look at the weekly, and then go to the monthly, or sorry, the daily, where I take most of my trades. Okay, that's just a quick exercise just to kind of get an idea of what the overall markets are doing. Now, again, if I'm on the daily and I bring up a chart of the Dow here, I have the ribbons to tell me whether the weekly and the monthly are there. So I can do it off one time frame with the benefit of the ribbons. What I then do is I have a watch list called main ETFs. So what I have here are the ETFs for the Dow, the S&P, the Nasdaq, etc. But then I have the 12 different sectors for the market. So energy, right? Financials, uh, technology, etc. And so what I do is I go through those, and if there is a new setup or a clear trend, so for example, on technology, we're deep in the red here on the daily and the weekly, but the monthly is not aligned yet. It's still green. So if we were to find a market like this where all three were aligned, there we go, consumer staples, right? Has been trending higher, green on daily, green on weekly, green on monthly. Now what I would do is break that sector down and look at the components, the stocks that make up that sector, and that's where I would start my search for new trade setups, okay? And I know that I'm looking for only longs, not shorts, okay? Just to give you an idea of my approach. Now, when it comes to trading, finding an actual setup, here's the criteria I look for. I'm going to put up the 8-point checklist. Here it is. I'm going to go through them for you, and then we're going to go through it on the chart with actual real examples. Okay? So first of all, I'm looking for a clean chart. What do I consider a clean chart? Well, Walmart is a very clean chart here, right? What you will notice when you're in a strong trend is that the price bars are all very similar in size from high to low. They're very consistent throughout, okay? If you find a period where more volatility is coming into the market, like we see right now here, you'll start to see those bars get bigger and bigger in size, bigger fluctuations from high to low on any given day, right? And the movement gets more sporadic. So let me go say to so Zoom, for example, right? Ignore the lines. These are lines we draw in when we meet with our members. We have a membership group that I'll tell you a bit about later. We meet 3 times a week on Zoom for an hour each time. And we review numerous charts and we mark them up and we leave those in for reference. So you may see these trend lines drawn in from chart to chart. But you'll notice that when things are trending strongly, again, the bars are consistent. When you see volatility, they start to get all over the place and you just start going back and forth. So that gives you an idea of the areas that you want to stay away from and compared to the areas that you want to take trades in. Okay. Now let's go back to Walmart. and bring up that list again. The second point is we need a reason to trade. So we need a victory signal, either a buy or sell, etc. And then we need slope on the 20. One thing I didn't tell you is the blue line here is a simple period, is a 20 period simple moving average. That's it. Not weighted, not exponential. It's a simple period moving average. I use that for momentum. So what we want to see when we're thinking of going long is we want to see this line sloping upward. Okay. If we're taking a short, we want to see it sloping downward. If this line is flat like it is here, we do not want to take any of those signals. Okay. This is where you lose money. This is your chop. Using a 20 period simple moving average and looking at the flat nature of it will alert you to the fact that we are consolidating. And then you can draw a line across the highs, across the lows, and identify the actual channel and look for a breakout if you like. But we're in a consolidation mode. So all these buys and sells that you see in here, we do not want to take those. We want to take the signals with slope in the direction of the trade. That's a big part of this. Secondly, we want to identify the distance from the 20. So when we do get a signal, a buy, we don't want it to be away from the 20. We want it to be as close to the 20 as possible. Reason being, you'll notice that when it moves away, it tends to snap back. So the last thing we want to do is buy up here, only to watch it go against us immediately. We'd rather buy near the 20 and have it go in our favor immediately. That makes it much easier for us to stay in a trade and manage the trade the way we should, rather than getting nervous about it, getting in a hole, and trying to figure out how we're going to get ourselves out of that hole. Okay? Now, we're looking for where the bar closes on that. So whether you're trading on a daily time frame or a 5-minute, you're looking at the bar that corresponds with that entry, be it a buy or a re-entry here, the dots. And when price closes near the high of the bar, and you can just look at the top half of the bar, right? As long as it closes there, it has a very high chance of following through. So on the particular setup, you want that bar to be close to the 20, but you also want the close to be in the top portion of that bar, and vice versa for a short. Okay? And then a few other things we look for are we look to our left, and we want to see blank space, right? If there was prior activity here, it might act as resistance. We want to avoid that. So the ideal situation for us is to trade signals that are near all-time highs, like this one was, this buy signal. When you look to your left and you see nothing but blank space, the stock has an easy road ahead, a nice, clean, wide open road for it to move. And if you have momentum behind you, meaning that slope on the 20, even better, right? It usually moves nicely in our favor. We also want to look at the ribbons here, right? We want to make sure that they're in line. The higher time frames are in line. And lastly, we want to look at the earnings date. Okay, when is the next earnings date? This, of course, only applies to individual stocks. If you're trading an ETF, you won't have to worry about that. If you're trading Bitcoin, you won't have to worry about that. But on individual stocks, we do want to know when the next earnings date is. We want to make sure that it's far enough away for us to be able to have time for this trade to work out. So the only way I'll take a trade is if the earnings date is more than 10 trading days away from where I am. Okay, so that is the checklist. If these setups meet that criteria, then what I'm looking for, so I'll use this one as an example. Okay, so we have a clean chart, right? We have a signal, a victory signal. We have slope on the 20 in the direction of the trade, right? We have the bar closing near the 20. We have the close on that bar in the top half of the bar. The ribbons are aligned. We look to our left, there's nothing but blank space, and the earnings date is far enough away. And then what I've been looking for is a trade 1 tick or 1 penny above the high of this bar. That's it. Once that happens on the very next day here, that's when I would get in. Okay. And now earnings in this example was pretty close by. But let's say it was further along the way. What I would do once we approach earnings is I would exit the day before earnings. I don't want to stay in with earnings. Earnings can cause a gap one way or the other. I've never been able to find a reliable method to determine which way that stock is going to gap after earnings. So I'm happy taking those profits the day before and we go from there. Otherwise, if there is no earnings date around, you follow that until you get a change in color. Okay. And which means you exit the full trade. If you catch a nice runner like this, we do teach you methods to scale out of your trade a bit at a time. And if you were to get, additional entries that again meet that 8-point checklist, then you could add to your trade from there. Okay. There are examples or times where we would take a trade that doesn't have slope. Okay. But there's only two rules that you would follow for that. Let me zoom in a little and give you the example before we start flipping through numerous trade examples. So when the 20 is flat, if you get a buy signal when the 20 is flat, the only way you're allowed to take that trade is if this bar were to close above a prior high, which in this case it did not, right? Second part is if there were to be a successful retest of the 20. What I mean by that is if price crosses the 20 from below to above, then comes back, touches it here and bounces. Okay. This was earnings, so not a great example, but let's say it was just a regular day and it moved above here. So you moved up, came back, touched it, bounced and cleared the prior high. Then you'd be okay to take that trade. Okay. Otherwise, without slope on the 20 in the direction of your trade, I would never suggest you taking that trade. So let's look a little further back here. Here's a great example. Let me zoom in, right? So you get that cross, you get a buy signal, right? But you have a negative 20, okay? Here. So what you want to be above is a prior high here, not the prior high below your setup, above your setup here. So if we had this candle closing up here, that'd be one thing. Or second example is a retest, and here it is. So it comes back, touches, we actually get another signal, and we clear this high. So right here is where we could have gotten in. Then we would add, we would add, we would add, etc. We'd be out before earnings. So we'd be out on this day right here. Okay. That's the way we would play that. Now, when you're adding, you don't want to just continue to add, right? You have to think of your account as a whole. We're going to teach you money management rules where you're not overexposing yourself. Okay. A long time ago, when I first started out, as any of you that have followed me have heard this story in the past, but I took a big loss early on when I thought I knew what I was doing, but really didn't. And after that loss, the only way for me to be able to cope and pull the trigger on new trades was to come up with a short list of money management rules that would prevent me from ever taking a big loss again. Losses will happen. You're going to take them. I'm going to take them. They're part of this business. But what you want to make sure of is that you keep them small. When you take a big loss, they're difficult to come back from. A small loss is easy to recover from. And Victory alone does a very good job of keeping your losses small. So for example, look at this buy. It's not a valid buy. We don't have slope upwards on the 20, etc. But let's say we had taken this. What you'll notice here is that as soon as the stock starts going against us, it'll get you out. Okay? It'll get you out. So your losses are typically very small, but catching a nice run will more than make up for any loss many times over. Okay. But if you take advantage of the offer that I'll give you later, we will teach you 5 money management rules, very simple money management rules that will guarantee you never take a big loss again if you follow those rules. Okay. And there are not a lot of guarantees in this business, but that is one guarantee I'm happy to stand behind as long as you follow those 5 rules religiously, which are very simple and easy, and you'll never have a big loss again. All right, let's start going through some charts. So Vince wanted NVO. Great name, by the way. Let's look at NVO. And let's go more recently here. So when I'm flipping through charts, what I want you to look at are these areas with slope. And I know this is, hindsight's 2020, obviously, but um, it, these are the type of trades that I want you to get used to looking at. When you start using this, it'll only take you a few days to get comfortable with it, and then you'll easily be able to spot these. But for now, what I want you to focus on are not areas like this. This is useless. We would not be taking any of these trades. If you look at and analyze any of these symbols with this 8-point checklist, right, they will fail. There will be 1 or 2 boxes that you cannot check, which means we would not be interested in these trades. Okay. What we would do here is mark the highs, mark the lows, wait for a breakout, and then potentially trade the breakout. But aside from that, this is what you'd be looking for. So any one of these right in here, these two, um, when you think of the checklist, you have a clean looking chart. Do you have a slope on the 20? Yes. You have a victory short setup. Is the bar close to the 20? Yes, it is. Did it close in the lower half of the bar? Yes, it did, right? Are the ribbons lined? Well, in this case, no, right? You have the weekly red, you have the monthly still green, so we would ignore it. If this bar was red, that would be the exact kind of trade we would take, okay? Let's look a little further back. Here, see, we were in a strong uptrend. Doesn't take a lot to notice. If you're going from bottom right to top, bottom left to top right with price, it's pretty easy to spot. But the other thing is, here's an example, right? You have a clean chart, trending. You have a buy signal close to the 20. 20 is sloping higher. We'll close near the high. Higher time frames are both aligned. You look to your left. There's no resistance overhead, right? You look for the earnings date, and unfortunately, this one was right there. Sometimes that'll happen, but if not, um, 1 tick or 1 penny above that high, we would get in and manage that trade. So I'll go a little further back for you to have a look at this. There you go, consolidation areas. Here's an area where you had very little slope on the 20, right? It's pretty much flat. So what do you look for? You look for a close above a prior high. If you get that and the higher time frames are aligned, all the other points on the checklist match, then you can take that trade. So you would have gotten in here, potentially added here. This one's a little farther away. I personally would not have added, but this one I might have. And then you get out of the full trade here. Going further back, here's a great example, right? Very small bar near the 20. You look to your left, there's nothing overhead. Higher time frames aligned, great slope. The higher the degree of slope, the better. It means there's more momentum, okay? It trades above the high, you get in, and it moves in your favor immediately. Pulls back a little, we could add, continues, and we exit the full trade. This is exactly what we're looking for, okay? So please, when you're typing a symbol, let me know what time frame you want to look at, right? Here's NVO on a monthly, for example. So if you're more of an investor, right, and you're taking these trades, obviously you're going to be in it for a lot longer. But again, another way to use the higher time frame, for example, if we go to now, is to look at, and you can see there, I mean, the trades are fantastic on the higher time frames. You're just going to have to be in it a little longer. But I mean, look at this one down here, these moves. So if you had avoided this due to the flat nature of the 20, you would have had an opportunity to get in here. Now that it's sloping, get in here. And, these moves are enormous. But now we're trending lower, here on the monthly, okay? On the weekly. So what are we doing? We're looking for a short trade here. So that's what we'd be looking for on NVO now, is for this to come down and give us some sort of sell signal and hopefully have the 20 sloping lower. At that point, we could jump in short, okay? John wanted to look at SO. Here's SO right now, okay? Now you can see that the bars are not all very similar in size. So we are in a period with a little more volatility than just a nice strong trend. But regardless, do any of these match the 8-point checklist? If they do, that's what we'd be uh, jumping on. Now, you can see that during this pullback and this move, the higher time frames fell out of line. So we wouldn't want to take that. But going back, consolidations here, like I said, these can be account killers if you try to trade in them, but they could be huge opportunities if you're just patient and wait for the breakout. So what you'll notice here is that we consolidate. Every one of these signals would have been losers in here, okay? Now, the reason why we couldn't eliminate these from the algorithm is if we eliminated these, it would eliminate some of the good signals. So we opted to leave them in and just explain to you that these are not what you want to take. Now, when you get a breakout, right? If you're still fairly close to the 20 sloping, the higher time frames are aligned. You look to your left, there's no resistance, etc. That's a great entry. And so there it is. That's what you'd want. Okay. Same thing. So, right now, there's a lot of these charts that are sort of mixed with time frames. But have a look. This one, SO, higher time frames now are both green again. So as we pull back here, any day now, we might get a new entry right along here, which would look pretty good. So again, whether you're looking at the daily, a weekly, or a monthly, especially if you're near all-time highs, that's what you want to focus on. Okay. Let me show you an ETF. Okay. Communication sector, XLC here. That's the monthly. Here's the weekly. I love this chart. It is so orderly, so clean, so predictable, right? That I'm always looking for trades on this chart. If you look along these moves, any one of these would have made you money along the way, okay? But whether you're trading this on a monthly, on a weekly, on a daily, or say, let's go to the other extreme, a 1-minute chart, okay? Obviously, with a 1 minute, a 3 minute, you're going to need something with volume, right? Something that is traded fairly consistently. So, an Apple, a Tesla, anything that is in favor, you can trade on the lower time frames. And again, if you meet that 8-point checklist, your chances of success on these trades are extremely high. Let me go to the 5-minute. Okay, depends on the day. You can trade the SPYs on a 5-minute, right? But again, you want to be patient and wait for the ones that are fully in line here, meaning you meet all 8 points on that checklist. If you can meet, say, 6 out of the 8, it means you're taking on more risk. Okay, so for me, these are hard and fast rules. These are not, do I want to, do I really care if there's all 8 or not? No, to me, it's a must. There's either all 8 or no trade. That's it. And so, you come down and look for a trade like this here. Are you near the 20? Yep. Is there slope? There's dramatic slope lower during this 5-minute, on this 5-minute bar. Are they the 15-minute and the 30-minute aligned? Yes, they are. If you look to your left, is there some blank space? Yes, then off we go. Okay. And, with this indicator, we're going to give you a couple of training classes where we're going to show you, how to set targets, where this thing is likely to find support. and bounce and scale out and all those good things. A lot of other technical analysis tidbits. Jerry wants to look at IWM, the small cap ETF. Again, I'm just on a 5 minute chart, and I got here, and quickly you can see back here was a fantastic setup, right? It then turned around. Does this one qualify? Not quite. Higher time frames are not aligned in yet. And what are we in now? More of a channel, right? If you connect the highs, connect the lows, it's pretty clear that at least from a 5 minute time frame, have a look at this. It's kind of a descending triangle. I could have drawn this a little lower, but you get what I mean. If we break these lows and we're right, very close to, we're likely to sell off even more. Now, again, this is a 5 minute time frame. Let's look at a daily. There you go. It's falling apart here. Okay. So if you look at this little bit of consolidation, right? Had you drawn a line across the highs and across the lows, right? Right here was potentially a good entry. Now, does it meet the criteria? It does not. We've been, this doesn't even meet the criteria of a clean chart. But so you may at first glance think, well, we're ruling out a lot of trades. That is intentional, and that is a good thing. Believe me, when you run a scan on any given time, any given night, you will find numerous setups. Your job as a trader is to weed out all the bad ones and find the good ones, the easy ones. What happens when you do that is not only will you have way more winners than losers, but your winners are going to be much bigger than your losers. That's the kind of math you need to be consistently profitable with this. Okay. So the Russell has been very choppy, very ugly, even back here. Okay. So not a great chart to trade, meaning it doesn't give you a high probability of making money on this chart when you're trying to time it. If we're going to the higher time frames, you know, overall, hey, we've been trending higher on the monthly. We're now back to support. If we were to get a bounce from here and get a setup long, that would give us an indication that, hey, maybe we're about to make a move back to all-time highs. But we don't have that yet. So we have to wait patiently. Okay. Peter's asking, please check list one more time. I'm pretty sure you'll receive a recording of this. So I'm going to put it up here. When you do, you can just pause that recording and jot these down. Okay. There are a lot of charts I want to get to before I run out of time. I want to show you some different markets, just to show you how it works across the board. So if we go to the futures market, for example, look at gold here. Okay? Now, again, this is a monthly chart of gold. So we were following this since 2021. When it made that high, pulled back, we were looking for a break above that high. That happened in March 22, failed, right? Got back here in March of 23 or May of 23, failed. Then it finally broke out here. Okay. What do we have when you see this breakout? You have significant slope higher. You have higher time frames aligned. You look to your left, there's nothing there. This was an all-time high. Okay. So even though we don't have a buy at that point, but we're already in a buy. The system is already telling us this is good. And from there, we went from 2,200 to about 3,000. Here, we're currently at 29.27. So is it worth the wait? Absolutely it is. And once it triggered from here, you just go back. If you prefer to trade on a daily time frame, you go back to the daily and you start picking off the trades along the way. Okay. So here was that breakout, right? You had a re-entry on the daily. Beautiful trade right off the start. How easy would it be to sit through that, right? You go through another consolidation. So you wait. You don't want to take these signals. You're going to get chopped out. You come back, you wait for a proper buy, and you take a win in there. You get another one, you take another win. Consolidate, you wait until you're out of there. You get another signal, and off you go. That is what we do day in and day out, whether it's gold, whether it's crude, whether it's, if you want to look at the dollar index, any market. Bitcoin. How many of you trade crypto, right? It works the exact same way. Look at this channel in here that we had marked up. We broke out, came back, retest that level. This buy here, boom. That's exactly what we want. Look at this one with slope. Higher time frames align. Look at the slope on the 20. This was a no-brainer trade right here. This is what we look for. Now, like I said, we meet 3 times a week with our members live on Zoom, where we review dozens of charts and identify these. I send out an email 5 times a week, recapping what happened in the markets, sharing the trades that I'm taking. Here, it's not an alert service. I will tell you, I'm not recommending those trades. What I'm showing you is what I'm doing. Whether you choose to follow along or not, that's up to you. But I'm showing you what it is that I'm identifying as good setups, right? And let's look at some international markets. Okay, so we have members that are from India that trade the Nifty here. Okay, the Nifty was one of the strongest markets for a very long time, and then back in the fall of 2024, October, it started to fall apart. So these may look like small trades. Trust me, they're not. Very significant profits along the way here. What else? Right now, Europe is very hot. Look at Germany here, right? These signals. Again, if there's a flat 20, right? This one here was not above the prior high yet. We cannot take that, okay? Even though the higher time frames were aligned, you know, all those other checkpoints could be ticked off. No overhead resistance, etc. But then look what it did. It came back to retest. And what did we get at the retest? Another entry here. This one we can take. And off we go. It pulls back, we can add. Off it goes. It pulls back, we can add. We can add. Until we hit our money management rule limit, then we just hold on. And we're still in this trade. UK. Look at that consolidation, right? The longer the consolidation, the bigger the move that comes out of it. So if you draw a line from when the channel started to when the breakout was here, you take that line, if it broke out to the upside, and you draw it upward, that is the size of the move that we're expecting. So right now, we've only gone through about a third of that move. There should be much more coming. France, real strong move in here. Look at back in here. These ones. When you have that kind of slope on the 20, odds are very, very high of a continuation of that trend. Okay. With that kind of momentum, that is exactly what we're looking for. So again, whether you're trading an index, an ETF, a crypto, anything, it works the same way. 5-minute, 15-minute, daily, weekly, monthly, it doesn't matter. It all works the same. Let's look at a few others. Let me know if anyone else, let's see, maybe there's some questions here. No, I think we got it all right now. Okay. Look at Royal Caribbean, right? Just a beautiful, clean, orderly looking chart. That's what you want to trade. If you ever have time on a weekend, okay, go through as many charts as you can and build a watch list of clean charts. What I mean by clean charts is when you first bring that chart up on your screen, you should be able to quickly tell, immediately tell if there's a uptrend, if there's a downtrend, or if there's no trend, okay? And the second step is you look at the bars, the price bars. Are they all very similar in size, right? If a chart is in a long trend, you create a watch list called long trend. If it's in a short trend, you create a watch list for shorts, okay? But you only include those charts that are trending with slope on the 20, very clean, very orderly, and then you sit and wait for these to appear. That way you shorten your search every night but you're going to make sure you're on the strongest of the strong charts. Right now, I were to bring up RCL. What do I see here? Can I tell what kind of trend there is? Is there a trend? The answer is no. We're in a consolidation phase. Okay. Maybe we're going to go lower and start a downtrend. We're not there yet. We have red bars on the daily, red on the weekly. I don't know if you can see behind those signals. There it is. It just turned red, but still green on the monthly. So there is no actual trend. So I would move on. I would not add this to my list. Okay. Um, but if you look back to when this was trending and all the trades we could have taken in either direction, the majority are winners, and that's what matters. Some of those trade ideas that I send out with the nightly emails, I'll give you 4 from the last week that we had. Okay. AMD was one. AMD, I've been hearing so much talk about how undervalued it is, right? And how if you look at the valuation compared to Nvidia or Palantir or anything else, you should be buying AMD. Why? Why in the world would anyone want to buy this chart right now? Yes, maybe months from now, years from now, this will be much higher in price. Right now, it is being sold. Okay. Sellers are outpacing buyers here, right? It's a clear trend downward. And that's all you should care about. If you see red on the daily, red on weekly, red on monthly, you know, that's the direction you should trade in. This was the trade we took last time. This was the one I highlighted for our members. Just an easy, easy trade lower. Nothing to the left to worry about. Everything aligned, off it goes. Another recent one was Estee Lauder. Okay. Not as clean. Okay. Kind of choppy here. And look, see, I'm showing you why we do what we do. Okay. This one wasn't as clean, right? Looking back, I should not have taken this trade. Okay. You see the difference between this area and now here, this kind of sideways back and forth, right? You see that? So, but it looked like a real nice close, nice slope, higher time frames were aligned. I was targeting this here, but look what happened. Came down one day, turned around, change of color means we're out. Now, good news is it's a small loss, but you see the difference? This is why traders lose money when they get caught in a chop. Now, it happens to all of us. Okay. Let me show you a couple of others. HOG. This one's a nice clean trend, right? This was the short. Took that. It's doing very well for us. Why? Trend and momentum in your favor. Higher time frames align, nothing to the left. Nice, clean, open road. That's what you need. Murphy Oil, MUR, was another one. Okay. Strong momentum. Look, top left, bottom right, lower highs, lower lows. That's what we want. This was the trade. Boom. Worked out great. So you see, if you look at just those 4 and you look at the size of the wins compared to the size of that one loss, you're way ahead of the game. You could overcome many, many losses with just one of those wins, let alone having more wins than losses. But the key is to remain disciplined and trade the ones that have a very clean, strong trend in one direction with momentum in that direction. Okay. Let me see if there's any last minute questions here. John says, amazing platform. Thank you. Let's see. How often do you scan for sectors and then the stock? The sectors, that's Deborah's question. Deborah, the sector scan I do nightly. It's only a dozen charts. That's all I do is I look at those sector charts and just to identify when a turning point might happen. The review where I'm talking about looking for clean charts and building a watch list, I do that every weekend. That's what I do for that. And if you're busy one weekend and you skip a weekend, it's not that big of a deal. Usually those watch lists, you'll have quite a few names on there. You can even skip a week and it's not that big of a deal. But the sectors I will look at every evening. Okay. Uh, Deborah also wanted to look at Siri. Sure, let's look at Siri. Okay, so Deborah, what do we see here right now when we look at this? Just look at from this area to this area. We're in a channel, right? We can take a line and we can mark the highs here. Okay, and when you're marking the highs, you could just take the highest high and the lowest low. But what I like to do is try to get as many touch points on that line as I can. Okay. Oops, I drew it a little wonky, but anyway, you get the point. So right now we're in a channel. So whether we're getting a buy signal or a sell signal, I'm not taking that trade until we're outside of the channel. We also don't have much of a slope. We also have a mixed look on the higher time frame, so we don't want it. Why would we want to make trading difficult for ourselves? We want to make it simple. Okay. The reason why 90+% of the people that try this fail is they're either not able to stick to the rules. In other words, they can't get caught up in the hype and so on. And they're not disciplined enough to follow it. The two most important characteristics for success for discipline and patience. Okay. Both of those come down to waiting for the right setup and then managing the trade appropriately, which again, we'll teach you. But look at back here. Look how strong this trend was. Look at those bars, how very similar in size they are, right? Look at the degree of slope there. Could anyone argue that this was not a downtrend? No, not only was it a downtrend, it was a strong downtrend. Higher time frames align, okay? There was nothing when we looked to our left. So a trade like this is an absolute no-brainer. Easy as anything to jump on as opposed to this. So now we wait, we exercise discipline and patience, and we wait for a breakout. You can create another watch list of just channels and look for those breakouts. Okay. Let me see. I want to try to get as many questions as possible. Yeah, Deborah, the bars are colored based on the trade signal. So if it's identifying a short, they're going to remain red until we have a change in color, which means you should exit that trade. Okay. If it's a long trade, they will be all green until we get a sell or an exit, and they'll be red. If you see yellow bars, it means there's no long trade, there's no short trade. You should sit on the sidelines and wait for the next signal. Okay. Now, let me briefly just tell you. Oh, wait, another last minute question here. Have you created your own $1 million AI market scanner that's able to locate the best high probability setups? No, certainly not an AI scanner. We, again, part of our service is to highlight what I'm trading. We do have this system available both on TradingView and on Metastock. Metastock, we do have a scanner. TradingView, unfortunately, doesn't have the capabilities yet for that. But especially if you're just starting out, I would encourage you to go through the charts manually. You want to train your eyes, okay? Following this checklist initially will take you a bit of extra time, but once you get used to it, you'll be able to whip through charts very quickly. When I first started out, what I started doing was I reviewed over 3,000 charts every night to train my eyes on different technical analysis patterns and et cetera, which has helped me immensely over the rest of my career. So I would encourage you to do that. You don't have to go through 3,000 if you don't want, but once you get good at it, you'll be able to go through 3,000 charts in less than half hour. It really doesn't take very long. John, this is the TradingView platform. Okay. Now, if you're interested in this, please go to tradingwins.com/start. The link is it will be put in the chat for you. Okay. It's tradingwins, wins.com/start. That'll take you to this page. It'll tell you a bit more about myself and our service here and what we do. If you scroll part way down, there's a video here that I'd like you to watch. This does a good job explaining what our service is all about, the things that we do in addition to this indicator. Okay. And then a little further down is the Trading Winds Elite offer that we're offering today. Okay. Normally we sell this for $291 for a 30-day period. Right now it's $7. Okay. Now what you're going to get with this is a full 30 days access to our Elite program, which is 30 hours of videos, of instructional videos, different topics of technical analysis. You'll also be part of our community, which you'll join us live on Zoom 3 times a week. If you can't join live, you can email us a question. We'll answer it during the chat, and then we will email you a copy of the recording, and you can get your answer there. We are also launching tomorrow, actually, a chat feature. We will all be on a chat group. We can text back and forth all hours of the day, share trade ideas, etc. It'll be great. And then you get 30 days access to the indicator that I just showed you, all for $7. If you just come down, click on the link, it'll take you to this page. You'll notice that it's all already set to $7 and go from there. Okay. I'd love to stay on for more questions, but I think I'm out of time. So I'm going to pass it back to Fausto. And Fausto, thank you again for having me on. I really do appreciate it.
Vince, thank you so much for being here, and everyone, thank Vince for being here, and you appreciate everything you've done. And thanks. So we'll look to have you back again. And then once again, like everyone else, take up on his offer. I mean, everything is very within budget for everyone to try a little bit of everyone's stuff. That was the main goal for everybody here, and that's why we do it. Let me just take over the screen, and let me just